with what's up and what's down, what's moving. Ashish Gupta is Chief Investment Officer at Axis Asset Management Company. Ashish, good morning. Great to have you with us here on the program. Thank you very much for your time. I want to start with what I think is pretty close to your heart as well, which is financials. And more commentary around the fact that maybe large private financials and their time is nearing in terms of for them to do well. Because everything else has done so well. And here there is some valuation comfort and et cetera, et cetera. I just wanted to start there. Are we at the cusp of something, or you think it's going to be a regular kind of sector with and one should really hope for any outsized kind of gains, maybe relative outperformance from here? What are your expectations from the space, large private financials?
Morning, Prashant. No, I agree with you. I think what we have clearly seen in the past few months is the participation in the market moving to sectors that had lagged. So if you see in the last couple of months, sectors like healthcare and IT have done better, despite really no dramatic change in their growth outlook. Maybe some of the concerns that were there on the IT sector growth have receded a bit, but really there's been no dramatic upgrade to earnings. And on a similar sense, I think the financial sector does look, as you mentioned, fairly attractive in terms of valuations. I think what is really needed is the overall liquidity environment to improve. More than really even rate cuts, I think the central bank stance on liquidity is very important, because I think that is what has been holding the deposit growth back. And lack of deposit growth has pushed banks to pull back on loan growth. So I think as that changes over the course of the next 6 months, given the fact that inflation is in control, I think financials should do better. The other factor I think that should play out more favorably is the fact that there were some concerns on the unsecured loan business in the past few months, and you would have seen the June quarter earnings. A few NBFCs and banks reported an uptick in delinquency there. The feedback we have from the credit bureaus, from the bounce rate, various companies are reporting that the situation is also stabilizing now. So I think both these factors should contribute to better performance from the sector. Of course, a huge re-rating also seems unlikely, because the earnings growth trajectory will be moderate, because as rates come down, bank margins will also moderate. So I don't think there's a huge case for an earnings upgrade-driven re-rating, but I think a valuation catch-up is certainly overdue.
Ashish, hi, morning. Reema here. Your view is that markets do remain overvalued across the investment part of the economy, and we may see normalization in these segments. So is your advice now for retail shareholders that perhaps we should book profits in some of these infrastructure, capital goods, defense, power, which have done exceedingly well in a very short span of time, and perhaps look to allocate it to some of the underperforming sectors? Is that the advice?
No, I think one part is certainly that we have to go where the earnings upgraded earnings surprises will come. And if we look at the June quarter earnings, actually, we saw these sectors continue to drive earnings. So overall earnings growth for corporate India moderated. If you look at Nifty, earnings that were down to single-digit percentage, but actually these sectors did have better earnings growth. So I think if I have a 2-3 year view, these sectors will continue to do well. So I would not really recommend that switching out of these sectors and move into defensive. But given the valuations, we have to be in stocks where we have confidence about the earnings growth actually coming through.
Okay, all right. Hi, Ashish. Good morning and good to see you in. Nigel on this side. Ashish, I wanted to ask you a view on PSUs. They were the toast. Everyone loved them in the last 3-4 years. You made big money out there. But off late, they've been underperforming a little bit. anything you'll still like in the PSU basket? Some of those sectors went out of whack, but some of them, there are still some tailwinds. How are you all placed?
Yes, so I agree. I think there were two real reasons for the PSU rally. One was the re-rating that happened, and second was the uptick in performance. If I look at several PSU companies, their growth outlook is still very solid for the next 2-3 years. So if you look at PSU companies in the power sector or the defense sector, I think their growth outlook for the next 2-3 years is still very positive. Some of the valuations may be expensive, and therefore there is some correction that is underway. But we still feel confident that over the next few years, these companies will do well because the growth tailwinds are there. We are not as positive on PSUs where there is not as much turnaround or that are more cyclical. But I think the PSU pack where there is 2-3 year growth visibility, I think that we are quite comfortable with.
Ashish, recently Axis also launched a consumption fund to just take advantage of increasing incomes, urbanization. Basically, India's expanding consumption patterns. In this consumer basket, how would you pick stocks?
So I think one thing we have really seen over the past 3 years, that even as the narrative played out that consumption had lagged the overall investment side of the economy, within consumption, there have been companies that have been benefiting from changing patterns, and the patterns could be related to what people consume as well as how people consume. Right. And I think that really opens up a vast array of opportunities. When we are talking about consumption here, we are actually not limiting ourselves to, say, one segment of consumption like FMCG. So when we talk about consumption, we look at the entire wallet share of the consumer, and that could be his spend on, say, even real estate. It could be his spends on tourism, travel. It could be his spends on automobiles. So it's actually a fairly wide basket where people allocate their spends to. And we find that even as there is some cyclicality in the mass consumption side, and it had a delayed recovery post-COVID, there are companies where you are seeing much stronger trends even through this. And that is the big opportunity, and particularly now where we are in terms of the per capita income and the inflection point in some of the product categories.
Ashish, just to pull back a little bit from sectors, etc., and the market itself, there's inflows, not a problem, right? So much money, as you can see from that Bajaj housing demand, it's just there. The domestic bid is so strong, so there are no dips. I mean, small dips, 1%, 2%, 3%. That's it. On the other side, there's a lot of supply as well, and you must be seeing pretty much all the deals, right? IPOs and otherwise. How is this going to balance out? Do you think supply at some point it'll all be easily absorbed, or will it at the margin start to overwhelm, keep markets under check? Briefly, if you can sort of weigh in on that. Yeah.
Sure. So I think that's a fair point. I think markets, as we know, are self-correcting mechanism. So if there is a strong inflow or demand for stocks, the supply also goes up. And we have seen the supply go up from various pockets. Supply has gone up, as you mentioned, because there have been large IPOs. Supply has also gone up because there have been very large private equity stake sales. Supply has also gone up because even promoters, both domestic and multinationals, have sold into this valuation expansion. So I think today, if I look just last 6 months data, supply is already in excess of the net inflow into mutual funds. But the fact that even the FII numbers have turned positive this year, there is very strong domestic retail interest into the market has meant that the market uptrend has continued. So I think we are seeing further acceleration in supply. So the IPO pipeline over the next few months is actually even larger than what we have seen year to date. So we have to be watchful. And my take is that just because there is some consistent inflow into mutual fund and insurance companies, we should not be complacent that there cannot be any market correction, because when sentiment turns and when some of the discretionary pockets, which are the FIIs and direct retail, pulls back, this magnitude of supply will be difficult to absorb.
Thank you very much, Ashish, for your thoughts and insights on the markets and individual sectors. Great chatting with you. And